Good morning, traders. This is Evelyn from Astra Montis, and I'm here to bring you the latest insights for the week of November 4 to November 8, 2024. Let's dive into what to expect in the upcoming week. This week unfolds with heightened anticipation as American citizens prepare to cast their votes in a fiercely contested presidential election. The race between Kamala Harris and Donald Trump has narrowed significantly, with the outcome hanging on pivotal battleground states. As the election looms, investors are closely monitoring the implications for Federal Reserve policy, particularly in light of recent economic data. Meanwhile, central banks around the globe, including the Reserve Bank of Australia and the Bank of England, are signaling cautious approaches to interest rates amidst evolving inflationary pressures. The landscape for investors and policymakers is both uncertain and rife with opportunity, as the results of the election could reshape economic strategies moving forward. As U.S. citizens head to the polls, the presidential race between Kamala Harris and Donald Trump has tightened significantly. Harris, who initially led the race, now faces a fierce battle, with the outcome likely decided by key battleground states. Trump's policies of tax cuts and import tariffs, particularly on Chinese goods, are considered inflationary, potentially slowing rate cuts by the Fed and driving up Treasury yields and the U.S. dollar. While tax cuts and deregulation could boost Wall Street, tariffs and slower rate reductions might lead to a market pullback after a potential Trump victory. The Federal Reserve's response to the election outcome will become clearer on Thursday with the committee's monetary policy decision. Investors anticipate a 25 bps rate cut in both November and December, given the latest U.S. data showing improvement. However, a hot NFP report and a Trump victory could sway the Fed towards skipping a cut next week, as suggested by Atlanta Fed President Raphael Bostic. This could either lead to a rate cut with a hint of a December pause or a complete skip to avoid surprising investors. Regardless, current market pricing indicates potential gains for the U.S. dollar unless the Fed signals a need for aggressive easing, which seems unlikely. In September, the RBA kept interest rates steady, citing high underlying inflation and projecting a delay before hitting their target range. They emphasized data dependency and their commitment to price stability, with the Melbourne Institute predicting inflation around 4% in the next 12 months. A rate cut strategy akin to other central banks seems unlikely. Market participants see only a 20% chance of a 25 bps cut by year-end, fully pricing it for May. Investors will scrutinize the RBA statements to confirm if the bank will hold rates longer. If so, the Australian dollar may gain slightly, but its downtrend against the strong US dollar is expected to continue unless China implements significant economic measures. At their September meeting, BOE policymakers capped interest rates at 5%, signaling caution about future cuts. However, BOE Governor Bailey later indicated potential for more active rate reductions if inflation data showed progress. Indeed, September figures revealed a drop in headline CPI to 1.7% Y/Y from 2.2%, and the core rate fell to 3.2% Y/Y from 3.6%. Market participants now see an 80% probability of a 25 bps cut next week, with a 30% chance of another reduction in December. The impact on the pound will hinge on voting details and policymakers' communication. A close decision and cautious statements could strengthen the pound, while clear indications of further cuts may weaken it. This week has been defined by crucial developments that will shape the global economic landscape. The imminent U.S. election results will not only influence the presidential race, but also have profound implications for Federal Reserve policy and market dynamics. Additionally, the RBA's steady rates and the increasing probability of rate cuts from the BOE highlight the careful balancing act central banks face amidst fluctuating inflation data. As we move forward, staying informed about these key events will be essential for understanding their impact on markets and investors in the coming weeks. To conclude, as we navigate through this week's trading landscape, it's essential to closely monitor these significant updates. We appreciate your confidence in our insights and wish you prosperous trading in the days ahead.